What is going on, guys? Can you hear me? Let me know if you can hear me, guys. Let me know if you can hear me. Whoop, whoop. What is going on, guys? Let me know if you can hear me. You ready to run for office? Just need the slogan. Yes. Can you guys hear me? All right. Now, I have a test, okay? Let me know if you guys can hear the screen. 1 second. Let me know if you can hear the video. Can you guys hear that video? Let me know if you can hear it when I did switch to it. I turned it off for now, but let me know if you were able to hear it. No? Wait a minute. Can you hear it now? Hold on. You can't hear this video right now? Okay. What about...
All right, Diana, speaking of those prices, we saw in the Case-Shiller Home Price Index report yesterday that many home prices may be cooling. Is that good news for buyers now and in that all-important spring market that is yet to come?
Cool. So we got...
Dom, I'm going to call that a little bit of a head fake. Why? Because
all right. What is going on, guys? Good to see everybody. 421 of you here. Good to see you. Good to see you guys. So we got Jerome Powell coming up at, 2 p.m. Eastern. So in 27 minutes, we're going to have the decision. We also will have Jerome Powell actually speaking at 2:30 p.m. Eastern, right? So that is what we are waiting for at the moment. I did take a few scalps this morning, nothing too crazy. Did have an epic trade on Microsoft. If you guys were part of the live stream yesterday, what did I tell you? That I'm planning on doing a what on Microsoft? If you guys remember from yesterday. I said I was planning on doing an iron condor for Microsoft and that I would send it out in the Discord. I ended up doing an iron condor. I did a 25 delta iron condor because if you remember from the live stream yesterday, I was saying that the iron condor for Microsoft was paying quite a bit. So we were risking $2.80 to make $2.20, but it was a 25 delta iron condor, which means there's roughly a 25% chance that you're going to lose, but a 75% chance that you're going to win. So for 75% win rate, to pay $2.20, which is like 78% of $2.80, was insane. And you want to find these asymmetrical bets. Usually, if someone tells you, hey, I'm going to give you a 75% chance of winning this bet, you would only expect to get paid out, if you're talking about true odds, about 33%, right? If your expected win rate is 75. In this case, we got 220, which was almost 2.5 times what we should have gotten based on the statistics, right? Obviously, if you're a gambler, this type of math comes very easy to you. But it was insane because, moreover, not only was there a 75% because of the delta, it was 75% chance of winning, but additionally, we had more context that Microsoft, 67% of the time, does not meet the expected move. So an iron condor was even more lucrative in that case. Ended up closing that for 80% this morning, 80% profit. You could leave it open. You will likely get 100% by Friday. But for me, it wasn't worth, exposing it to 2 more days of risk with FOMC just for an additional 20%. So I was happy closing it for 80% profit. Again, I announced this yesterday on the live stream. And then I sent the actual details of the trade in the Discord. So happy that you guys took it, especially for those of you in the Discord. But if you were able to make out with that trade from the live stream yesterday, also awesome. I can hear pandas making love. I don't know what you listening to, bruh. All right. Gotta love YouTube giving me a Robinhood ad before I can watch Z live. Make America travel again. Can you do a Tesla video on current landscape, the share compensation, if you're adding any shares, and where you think it may go price-wise in the short to midterm? Just a couple of questions. You want fries with that? Chocolate shake? What would you like? Can Microsoft bounce on earnings? Microsoft already reported earnings, bro. Go back to bed. What you talking about? Microsoft already reported earnings yesterday. What you mean, can it bounce on earnings? McFlurry. But Microsoft tanked today. My God, bro. Some of you should not be in the market. That's all I got to say. Microsoft didn't even make the expected move. Palantir is a sell. I don't know. I haven't looked at Palantir. Recession crash is coming soon. That's a tough one. That's a tough one. We'll talk about that today. We will talk about that today. You forgot to announce you were live on the Discord. Do on. Thank you. Ambient Junkie says, Z, chill. All right. Ambient Junkie wants to kill the fun. So we will kill the fun. Live now. Thank you, Duan. Appreciate you, man. New York bank to fail soon. Maybe. Maybe. Alan says, in-depth questions only, don't be lazy. Someone asked the most detailed question on Tesla, still gets absolutely toasted. No, it's a good question. But fuck, man, people are so demanding. He asked like 10 things and not even a please. Just rapid fire. Do this, then this. So I just asked him if he wanted fries with his order, bro. That's all. There wasn't even a please in the question. Can you do a Tesla video on current landscape, the share compensation, if you're adding any shares, where you think it may go in the short to midterm? That was it. So I just asked him if he wanted fries. Valid question? No? Probably won't do a video on Tesla. It'll get like 5 views. I don't care about the share compensation. At the end of the day, it's good for shareholders because that means that the CEO is getting less money. Sucks for Elon, especially if he was wronged out of it. From what I was reading, I don't know much of the details. From what I was reading, he was wrongfully cheated, I guess, for lack of better words, out of that money. But is it good for shareholders? Yeah, it means less money goes to him and more to the shareholders. I don't think it has anything to do with where Tesla is going. It's a completely separate topic. Someone is copying your account on Instagram? Yeah, bro. That's like every other day. You think Jay Powell makes a surprise cut? What is this, bro? What is this? No, I don't think he does a surprise cut. Why would he do a surprise cut? Did you scoop up some Tesla at 185? My Tesla cost basis is actually less than that. So for me, I would rather wait. Like I said before, I'd rather wait a week and see what happens here, if it can base here. But I don't mind buying Tesla here either. Yeah, I don't mind buying Tesla here either. Morning Z, great podcast with Riz. Hope you go back on there soon. Ask him. Tell him you want me back on there. Appreciate you. I had a really good time doing that podcast. Yeah, he's my favorite person in this space as far as interviewers and hosts go. I think he's by far the best one. So volume seems kind of low. I think it's on your end, bruh. I don't get good for shareholders. Mean I have 500 shares. I get more shares. Yes, you will magically get more shares. It's just going to appear in your account. They're just going to be like, more shares. No, dude. It means less money going to Elon, i.e. more money for the company, i.e. more money for the shareholders. Daddy Powell doing a surprise cut. Where do you guys get this stuff? Are you watching Stock Mo or Meet Kevin right before this? Is that where like 5 of you are saying a surprise cut? Did one of these clown YouTubers tell you about this? How your filter is now gone? What filter? How my filter is gone? Oh, you mean like in the way I speak? Like I have no filter? I don't think I ever had one before. It's not gone. I just never found it. All right. Do you have any idea when they said rate will be steady? Yes. So you're asking me my prediction? They are going to keep rates here. That's my prediction. March meeting, things could be different. Right now, we have shifted towards, and this is because of why. Remember what I said, that we have earnings coming up. And if earnings report negative outlook, negative guidance, right, then this will likely hasten the recession probability and probably get the Fed to cut sooner. So before earnings last night on Microsoft, AMD, and Google, the most probabilistic outcome of the FOMC for March 20th, 2024 was a pause or a skip. Now, after earnings, it has leaned slightly towards a cut. So 54% likely now we get a cut. By May, it's the most probable. We have about a 92% chance of a cut. 45% chance of a 25 basis point cut, 47% bet on a 50 basis point cut, right? By May. And only 5% chance that it will stay unchanged from where it is today. So, this is what I was saying about the market, is that if you study recessions before, right? Look at almost every single recession before, we tend to hit all-time highs right before the recession. So us hitting all-time highs now is not a surprise to me, right? Like people are shocked, but they're only shocked because they don't look at the data. If you look at 2007, we fell into a recession December 2007. October 2007, we made all-time highs, right? It's very common to make all-time highs before a recession. You have August 2000, all-time highs or near all-time highs with what happened in April 2000, which was the all-time high. So April 2000, we hit the all-time high. August 2000 matched it before a recession. So this is common. This is what you see before a recession. I think that, like I said in my earlier video, you're seeing a lot of layoffs, right? Guidance is now all of a sudden a problem for a lot of mega cap companies. And I'm not only talking about the Mag 7. I'm talking about companies like UPS, which laid off 12,000 workers yesterday, right? Companies like AMD, which is not in the Mag 7. This is what starts to unravel before a recession because of the fact that aggressive rate hikes are now taking a toll on the economy. So it's not a surprise to me that we hit all-time highs, even if we get a recession. This is what I was saying in my last video, right? That this actually is a time where my antennas are now up because of this type of price action with what's going on with peak rates. I'm not one of these clowns that's going to tell you what goes up must come down. So the sheer fact that we created all-time highs is not a concern to me. There's so many times in history where we create all-time highs where you don't see major declines. This is actually one of the characteristics of the stock market, is creating all-time highs, and there is no stupid mantra that exists in reality like what goes up must come down, right? But as I said before, once we hit all-time highs and we are at the peak of a rate hiking cycle, historically you have to pay attention. You'd be an idiot not to. And you guys know me, I'm not a perma bear at all. I'm as realistic as it gets. I look at the market and the data at face value. I don't entertain perma bear or perma bullishness. It's all just depending on what's going on. And looking historically at the rates, looking historically at where the yield curve is almost uninverted, when the market is at all-time highs and these things are happening, that is not a great sign, right? So we do still have Apple, Amazon, and Meta earnings on Thursday. If they give good guidance, it could prolong this rally a little bit more until March. We could hit that 5,000 mark on the SPX. That is very possible, but I'm not buying here, right? I'm not buying here. There's only a few things that I think you will get some value out of. RTY is one of them. I do think that if you are going to extract some value out of anything, it'll be in RTY, still 23% away from all-time highs. I don't mind Tesla here, even though I do think in a recession, it will drop even further than where it is now. But I don't mind this price here historically. I don't mind, obviously, bonds and bond funds. I've been heavily invested in TLT since early November when we sent that out in the Discord, which most of us now are in TLT. Because of that, TMF is better for short-term gains because it is a leveraged 3x bull bond ETF. But, we've been in TLT since November 8th, right? And even on the Russell 2000 on IWM, we've been in that since around the same time. We got in, I think, November 9th or 10th. We got in right here. So I can actually sell my position comfortably. It's already up a good amount. You want to get in the stuff early, guys. And, you know, I don't think anybody does it like us. I don't think anybody does day trading, swing trading, you know, really thinks about this stuff like, you know, like the trade that we had on Microsoft. This was really thought out. I'm not just betting calls and puts randomly, right? I'm looking at data. Everything that I do is data based. It has zero emotion behind it, right? So yeah, I do think the Fed is going to skip now. It is going to be very important what Powell says at 2:30, because what he says at 2:30 is going to determine whether we are hawkish or dovish for March. Is he going to give a hint, right? Is he going to give a hint that that they are likely to cut? Is he going to say, I don't know why you motherfuckers are talking about cutting. We're not even close to that. In which case you will likely see this go up and this go down, right? For March. It's very important for these short-term moves, what Powell says at 2:30. But in terms of what he actually will do, I think it's already priced in that we're not cutting in January, right? And I think the European Central Bank last week or the week before also didn't cut. They kept rates unchanged. So, you know, you'll likely get the same old yapping about our fight with inflation is not over, blah, 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 this type of junk, right? You'll probably get that. But it's what he says about March that is really going to determine what happens to the market in the short term. If he is hawkish, I do expect rates to go up. I am contemplating shorting ZT here before FOMC, before he talks. Undecided on it yet, but if rates go up, you'll see this decline. All right. Wow, 1,300 of you here. 248 likes. The disrespect. Hit that thumbs up, guys. Let other people find the stream. You want people watching Stock Mo? You really want to subject people to that? Come on. He's patient with all those questions. Tesla question was the best question so far. Me, Kevin did say rate cuts. See, I knew you guys got this bullshit from somewhere. I knew it. I can smell it when more than one of you comes up here with some crackpot idea. It's a carbon copy of 2007. I don't think so. If you're talking about the market, yes. If you're talking about what's going to happen, no, I don't think you can compare this to 2007. I am interested to see if we can get a potential play on crude oil and gold. And then I'm going to talk about which index looks like it's set up for potential play. Time to load TLT. I think you're way late, Maddie. Load makes me very nervous. Pause. But the word load makes me very nervous. We ripping or dipping at 2? Both. Both. If anyone's long or short, your stops, I guarantee you, will get taken out. I have 412.5 calls on Microsoft for February 9th, which is already at a loss. Thoughts about should I hold it or sell it? Bro, I know you guys, some of you guys like this, some of you don't. You made the decision to buy those calls. You got to make the decision when to exit, bro. My thoughts are that you should not buy those calls without an exit plan. Those are my thoughts. Have there been surprise cuts in the past? Yeah, of course. Emilio, congrats on the interview with Riz. Appreciate you, man. Would you do a podcast with me, Kevin? Sure. Why not? Do you trade UK stocks? No. Why the hell would I trade UK stocks, dude? I wonder how the Ethiopian cattle market will respond to Powell's comments. Any insight? Elra says, but his exit plan was to ask you. Oh, y'all are so funny. Y'all are so funny, man. 2 minutes to 2 p.m. Thoughts on Amazon. Thoughts and prayers. What is your outlook on 2024? Watch my last video. In your experience, in what market situation can small caps grow while large caps decline? It's not that large caps decline. It's that small caps usually catch up in this situation. But we are not in a typical situation because we are at peak rates with the market at all-time highs. What big tech reporting today? None. They reported yesterday and tomorrow. I'm afraid my goat knocked up my hamster. Oh my God, you guys are fools, man. You guys are fools. All right, we're going to get breaking news soon, guys. Fed decision imminent. Who's this guy? He looks like he's sitting on a toilet. I swear to God, I don't know why he looks like he's sitting on a toilet. Thoughts on PayPal. Thoughts and prayers. What do you think will be the decision of the Fed? My God. I think that they're going to skip. Skippity skip skip. What is the play on NQ? Chill, bro. Chill. How viable would you say a straddle strangle is here? I think you don't know how options work if you're thinking about that. Because, hold on. Let's listen to this.
Federal Reserve leaving rates unchanged at 5.25% to 5.5%, but making big changes to the statement. The statement twice mentions the possibility of changing the funds rate, setting out the circumstances for those rate cuts that maybe are nebulous, but maybe even a bit hawkish, depends on where you come from. I want to read you the statement that says here, the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. It later says inflation has eased, but that it remains elevated. So it's saying the committee will only cut rates when it's confident inflation is moving to the 2% target. No mention in the statement of whether it has that confidence. The statement also says, quote, in considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee removed that bias that was in there for hiking, where it talked about additional firming. That's no longer in the statement. The risks to achieving its dual mandate, the Fed says, quote, are moving into better balance. On the economy, there was an upgrade saying it's expanding at a solid pace. Had said it was slowing in the prior statement. Job gains, it says, has moderated but remains strong. And it removed the section on concerns about the impact of tightening credit conditions. That's gone from the statement. It also removed the section on accounting for prior tightening and monetary lags. It was a unanimous decision with new voters Barkin, Daly, and Bostic and Mester voting as well. So cuts, guys, are obviously in play, but the Fed at best is not telegraphing any timing around it or amount. And you could be ready to suggest those cuts may come later than the markets now expect. Tyler?
Hey, Steve, if you look at the statement, the key phrase that everybody was watching for was the one that you mentioned, right? Which was in previous statements, quote, in determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, ... They've gotten rid of that. On balance, that should seem like it's net positive in terms of clearing the path for or opening the door, a crack for interest rate cuts. Yet the markets did react marginally negative to this bit of news. Is that maybe fair to say, then, that the markets were already ahead of itself with regard to how many and to what extent rates would be cut in 2024?
I think that's a good assessment, Dom. I always dislike the idea of gauging the market reaction right after the statement comes out. I think there's some black box trading that's problematic. But here's the thing. Removing that statement, Dom, was the ante. Everybody thought that was going to be gone or changed in a way that was no longer going to essentially telegraph additional rate hikes. The question was, what did we get, Dom, when it came to telegraphing of cuts? We got a little bit. They mentioned the idea of changing the policies, changing the rate twice, once in terms of reduction. But remember, that reduction idea is in negative terms, as in we're not reducing it until we're confident, essentially, that we're heading back towards 2% on a sustainable basis.
Bob, I want to go to you, Bob Pisani, for the market reaction here. Obviously, immediate reaction. I know Steve expressed some concern about black box trading, but it does look like the S&P 500 at least took a little bit of a leg down here. What are you seeing?
You don't need black box trading for this. This is very clear. Powell, there is no reason for Powell to give up strategic ambiguity on the rate cuts. That's exactly what he has done here. Remember, everyone was expecting some kind of timing that was very, very clear. Back in December, they were expecting 90% plus chances of a rate cut in March. The market's come down. Now it's 50%. It's going to go down a lot more after this one here. So I know the bulls have been arguing that, oh, we have disinflation, therefore real rates are higher, therefore the Fed should be more comfortable cutting. The problem here, which I think the Fed has acknowledged, is the Fed usually cuts when there's economic distress, and there is no signs of economic distress. So you've got a tension here. And I think Powell is acknowledged, the FOMC is acknowledging that with the strong comment on the economy here. So the question is this: could the market handle fewer rate cuts with a strong economy? I think it can, but this kind of aggressive statement was a little bit of a surprise for the markets.
All right, that's the view from the New York Stock Exchange downtown Manhattan. Let's head out to the Midwest, Chicago. Rick Santelli with what the rates and macro picture looks like in the wake of this announcement. Rick.
Well, let's let the markets talk first. If you look at an intraday of two-year note yields, you can see it spiked up a bit, just shy of 430. Well below where we were yesterday, well below where we were the day before, well below where we were the last Fed meeting in December when we were at 473. If you look at a 10-year yields popped up, well, to 4%. But here they are, well below the highest levels of today. The dollar index getting closer to unchanged. The way I read this is I'm totally in agreement with Bob Pisani. It's a giant Rorschach. Pretty much, if you look at all the data points, whether it was ECI, ADP, regional Fed surveys like Chicago, Philly, there's definitely weakness coming into the economy. You could still argue the labor market's doing better. We did see jolts. We did see consumer confidence. So there's some cross signals going on. But maybe some of the best signals are, harken back to 2018, 2019, when the newspapers were all upset with the president. Political meddling and rate setting, heresy. But yet, look at what's been going on the last couple days. On the 30th, Tuesday, Sherrod Brown, Senator Sherrod Brown writes a letter to Chairman Powell saying you really need to ease. Over the weekend on Sunday, you had Elizabeth Warren, Senator Hinkle.
All right, I'm not sure what the hell he's talking about, but as expected, they left the rate cuts, the rates unchanged. Not a surprise. Supposedly, they were a little bit hawkish on their language. Obviously, we're going to hear from Powell at 2:30. You already know you don't take trades until then, or at least I won't take trades until then. Usually, you tend to see a counter move once Powell starts talking. You already have these equal lows here getting taken out. So I'd be interested to see what happens when Jerome Powell starts talking, to see if there's a potential reversal here, right? Because all we have is the report from CNBC that the Fed comments were hawkish, right? But we haven't heard Jerome Powell talking yet. We haven't heard him take questions. So I'll be very interested to see what happens with what he says, right? This right here, this seek and destroy type of price action, this is meant to take out stops, right? Like it's meant to take out buy stops and sell stops, as you can see here. So this is a no trade zone. You definitely don't want to be caught in a trade here, because regardless of whether you are short or long, you can actually get taken out by, if you have a stop. Now, if you don't have a stop and you're just trading recklessly, that's a different story. So I'm personally not taking a trade here. As I said before, I did take some scalps earlier. S&P 500 made low of the day. And NASDAQ hasn't even made low of the day yet. So we have major S&T divergence here, right? We actually took a monster trade for a silver bullet yesterday off of S&T divergence, but it was on ES, not on NQ. Shout out to those of you that were in that trade. Ended up making $500 per contract on that. So you have this higher low here, and ES is making a lower low, right? So even though NQ is down by a larger percentage than ES, it is, as a matter of fact, weaker because it is making new lows for the day while NQ isn't, right? NQ hasn't even matched the low that it made in 1030. Now, we do have 22 minutes until Powell. So we're trying to basically just monitor this and see whether we can catch a counter move here. If I was to long one right now, which I'm not, by the way, I'm just telling you in terms of an example. If I was to long one, it would be NQ and not ES. Right? Again, because of that SMT divergence. But I'm personally going to wait until Powell actually talks. Did Powell 1 o'clock? I don't know what that means. Silver Bullet, do you follow ICT? Yeah, Silver Bullet is an ICT concept. I do trade some ICT stuff, but I'm not an exclusive ICT trader, right? Played the usual pre-Powell drop. Yeah, I mean, that's the initial move. That's the initial move. The manager of the casino is about to speak soon. In 21 minutes. Yeah. SPY looks undervalued here. I don't know what that means, bro. Did he speak already? No, bro. He didn't speak already. RTY looks very interesting here because RTY has equal lows that I expect to get taken out. And usually when NQ and ES are acting irrationally, sometimes you can find a good trade on crude oil and RTY and sometimes on gold, right? Now, in terms of what the rates are doing, this is why I was saying that I wanted to short ZT from here. I'm probably not going to take that. Like button looks a bit people. No idea what you mean. Sold the Microsoft call spread yesterday. I learned from the Discord it paid good today. Awesome, man. I sold an iron condor. That way it's non-directional, but good job. Surprise cut my ass. Meet Kevin. See, Sushant, what did I tell you, bro? I knew when a few of you came in here talking about a surprise cut that was not an organic idea. I knew that you guys got this from somewhere. Fed committee will only cut when it has something about inflation, right? Let me see. Can I rewind this shit? Will only cut when it has greater confidence inflation moving sustainably to 2%. Same old. Same old. Surprise cut my ass. Are you still going to do lives after today? The day will be almost over, brother. I'll do a live tomorrow. Thoughts on USD short? USD what? Just the Dixie? Would be great RTY to touch 1965. Me, Kevin joined the Discord one time 3 years ago. That is right, actually. I forgot about that. Ahmad, I forgot about that. You're right. Are you worried about Elon throwing a fit? Worried for what? Thoughts on Meta earnings. Thoughts and prayers, bro. Thoughts on SoFi. More thoughts and prayers. Did Meet Kevin ask for your thoughts? No, he was stealing my thoughts, bro. That's what was happening. How do your swing trades come out only in the Discord? Yeah. Everything happens on the Discord. No, I'm not going to text you SMS. But you can set up notifications on the Discord for sure. Gold looks good for a long. Do you have any thoughts? Thoughts and prayers. 2 in the thoughts, 1 in the prayers. For those of you that are new, this is obviously an inside joke, but everyone's like, thoughts on blah, right? And it's like the laziest question ever, dude. Thoughts on Meta. On what? The glasses, Zuckerberg, the cash flows, the chart, the company, the earnings, a day trade, a swing trade. Thoughts on what? That's why those thoughts questions get shut down, all right? It's an inside joke, right? So if you're new here, you know, don't take it so seriously, but that's why you see this in the chat. Thoughts on prayers. Oh my God, bro. You're so funny. You're so funny. Prayers on thoughts. That's a good one too. Thoughts on the traveling trader. I don't know about him. I'm waiting on Powell. 14 minutes, guys. 14 minutes. In terms of earnings, in all seriousness, I thought Microsoft again was. I thought Microsoft was the most lucrative. I played it. It worked out. The thing is, it was paying so much for a 25 Delta Iron Condor, right? When I look at Google, the first thing I want to look at is, does it routinely beat the expected move or miss the expected move, right? I want a dislocation in either direction, meaning I want a stock that either almost always beats the expected move or almost never beats the expected move, because then you can make an educated guess, right? Google, it says options market overestimated Google stock earnings 46% of the time. So you can see here in the last 12 earnings that about half the time it beats the expected move and half the time it doesn't. So that 50-50 is not great for me. Microsoft was 67% of the time it didn't beat the expected move. So that already gave me an edge, right? What you're looking for is an edge. If we look at Amazon, and again, the Jerome Powell talks in 13 minutes. I will then be looking for trades after he talks, guys. Not right now. Options market overestimated Amazon earnings 58% of the time. So a little better than Google. Not enough of maybe not enough of a extreme edge there, right? If we look at Meta, 50% of the time. So half the time it beats, half the time it meets, right? Whoa, that rhymes. So not really looking for an earnings play, honestly. Apple was, what would I say? Microsoft was really like a very specific situation. Now, here's what's interesting. Let's look at Apple, which reports tomorrow. The options market overestimated Apple earnings 67% of the time. Wow. So same like Microsoft, only 33% of the time does Apple beat the expected move. This is risky because obviously this is an outlook quarter. And we also have the Vision Pro to consider, right? Which we'll see if they talk about it. But if that's the case, if Apple most of the time doesn't meet the expected move, then already we want to look at a potential iron condor, right? Did you just beat the me? Powell will say AI and the market will rip. Imagine Powell says that they are looking at using AI to determine when to cut the rates. I think this guy's right, bro. I think the market's gonna rip. I think Shock City Rocker's right. If Powell says we're going to be using AI to determine whether to cut rates or not, I think he's right. I think the market's going to rip. That's a great question. Thoughts on socks and socks on stocks? Oh my God, bro. This is a tongue twister. Thoughts on wearing thongs while trading? What, like thongs like the underwear or like the sandals that Indian people wear when you're in India? Do you listen to Joe Rogan? On occasion, bro. Like on occasion. It depends on who the guest is. Sushan says both thongs. Bro. Sushan is the chat goat, man. He has the funniest comments. I do want to monitor what's going on with RTY's equal bottom. So this right here does not make me comfortable for taking a trade on RTY. I do want to see this get rated before a potential move. NQ, still that divergence with ES. NQ making higher lows, ES making lower lows. If I was going to long one, it would likely be NQ. But again, I don't know how many times I got to say this. We're going to be waiting for Powell to talk because we will get a sense for it. So here's the thing. I don't think you guys understand what goes on here. CNBC already told us that Powell is going to be hawkish, right? They said that there were hawkish comments. They don't know when they're going to cut rates, blah, blah, blah. So that drop and that news is already priced in. If Powell doesn't further explain that and doesn't go into detail, then, you know, if Powell doesn't double down on those comments, they're already priced in, right? So what I want to look for is any potential of a reversal, right? I'm not looking to short this market from here because the market has been going down really all day since after Google earnings, AMD, right? AMD is down 2%, Google's down 6.5%, Microsoft only down 1 and change. So the market has been really dropping all day, and your best bet is to get a reversal to the upside because that'll be the biggest move. Not that I just want the market to needlessly go up, but that is the biggest move that you'll get is to the upside, right? Do you listen to Russell Peters? Yeah, bro. I love Russell Peters. Thoughts on moving to Dubai to trade full time? Better like the heat, bro. Dubai is a great city. Dubai is a great city, but you better like the heat. Who do you think will headline UFC 300? Pereira looking ready. I'm a huge fan of Alex Pereira, bro. I love that dude. I don't know. Did I hear something right about Chandler and McGregor? If McGregor's in it, of course he's going to headline it, bro. Big fan from India. Appreciate you, Jaya Prakash. Appreciate you, man. Wow, how many times you got to say it, bro? That's 15 times already. I'm going to have to put you in timeout if you say it one more time. Any thoughts on the weather in NYC? My God. All right, Powell in 6 minutes. Make sure you stay on. 6 minutes. ¿Qué pasó? What's going on? Retired today. How you doing? Pereira accomplished more than Hamzat in 2 years. Yeah, I mean, I guess. You know, I mean, beating Izzy, even though he lost to Izzy later, but beating Izzy is no knocking him out too, right? Like Hamzat had trouble with Burns. You can even make the case that Burns won that. So he's had trouble with the top tier, man, Hamzat. Where can I learn about bond trading? What are you trying to do with bonds, bro? I'm not sure what you mean with bond trading. Celsius is below 50. Would you consider leaps at this point? Leaps? No. No, definitely not leaps. Running the wheel? Sure. So you can sell. I don't want to miss Powell, so make sure one of you keeps me in check. We have 4 minutes until Powell. But you can actually sell. It's not bad. On Celsius, you could sell the March. Oh, that might actually be a cash secure put candidate. Honestly. And a good way for those of you that want to try to get into the wheel strategy or option selling with a cheaper stock, you could consider selling depends on what you're willing to pay for it, but the $50 puts you could sell for $4. So that would give you Celsius at 46. The 45 puts you could sell for $2. So that would give you Celsius at 44. And you can run the wheel on this, right? So if you get assigned at 44, you can then sell calls. I like Celsius, man. I like Celsius for that. I think the swing that I had played initially when I played calls, that was a very specific play after the stock split. If you remember, it split, right? Even though there's a pretty big volume shelf here for Celsius, I personally, at this stage, probably would like to sell puts over leaps. Up to you. But I think it's also a great stock to run the wheel on and learn how to sell options, whatever. I haven't checked on Unity in a while, man. We swung this bitch like 3 times. Took it from the first time, I think, like 28 to 33. And then from 31, took it all the way up to 40 plus. Didn't get back in it because the volume picture was not great. And it isn't anymore, in my view. So that play might be over too. All right, what did I tell you guys? What did I tell you on RTY? This will get taken out. We took it out. Would love a long on RTY. I'm not saying long it. I'm saying that would be the optimal play based on where it's at now. Again, I'm just talking about what has a lot of runway. I don't want to take a short because we're already down quite a bit. Powell in 1 minute, guys. Where's my CNBC?
We're past the time when they have to talk about inflation expectations in the consumer surveys and broad.
Shut up. Thoughts on banana hammocks? Yeah, I'm bullish on banana hammocks, bro. We should consider having a ukulele musical background to wait for Powell and not get crazy ideas. It really smooths the senses. What about SoFi for the wheel, says Penny. I'll look at SoFi in a second. Can you trade after hours with Top Step? Yeah, but if you have open positions before the market closes, they'll force you out of those positions. So either you close them yourself or they will sell them for you or close them for you. And then after the break between 5 and 6 p.m., there's a man. You can open your position again.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made good progress toward our dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory, and we've been seeing the effects on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December. Excluding the volatile food and energy categories, core PCE prices rose 2.9%. The lower inflation readings over the second half of last year are welcome, but we will need to see continuing evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
Gina Smilik from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and it has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6 month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry, if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition. But we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing, and that tells us that gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick Timmeros of the Wall Street Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged here today current policy as well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
So, as you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2% so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or its variants. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our teal book and they're in all the materials that we look at. But, I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly is so. In theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all because, for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around to see the economy turn down because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Hi, thanks, Chair Powell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we've worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above core is 2 point.
Swift Snail, you took those calls? Hell yeah, man. They played calls in the Discord, SPX calls. But yeah, this is why I was saying that SMT divergence between NQ and ES, where ES made lower lows, NQ made higher lows. You essentially want to look for a long from here, not a short. And that's why the person earlier that was like, oh, I told you it was going to drop. Well, obviously that information was based on CNBC's info that Powell was hawkish. So that information is priced in. This is how the market works that shows you how the market works, but in, a really short amount of time intraday, is when information is priced in, then it's going to require significantly doubling down on that information with new information to keep going in that direction, right? But yeah, that's awesome, Swift Snail. I don't know if you're in the Discord, bro, but we took SPX calls in the Discord. Um, 620 calls on Nvidia looking beautiful. Holy shit, that IWM call was so easy. I played Upstart 2. Yeah, RTY. I was looking for that low to get taken out there. And it got taken out, and then obviously rallied with the rest of the market. Tesla's up 1.14%. This is after it tanked last night. I think it was down to like 182 or 183 last night. Took QQQ calls. Damn, man. All of you guys made money. I'm so happy, man. That's awesome. Roman, thank you so much for your donation, bro. $20 to St. Jude's. Appreciate you, Roman. Took RTY at 1983. Fuck, what an entry, bro. Wait, that can't be. RTY at 1983. That can't be. You just randomly longed it? Because this retracement here was, the lowest was 1986.7. I was long in the Russell futures. Hell yeah, Lewis. Good job, bro. Good job, guys. I'm glad y'all are learning so far. Made enough for a lifetime membership. That's awesome. Retire today. You are living up to your name. Retire today. Oh, man. Super happy you guys were listening. But yeah, man, I mean, essentially that, that's how it is. You want to ignore the first move. Once that information is priced in, then it gives an opportunity for the market to go the other way. 100 ticks on NQ. Hell yeah. Made 1,000 now, back to bed. Damn, bro, everybody got rich. SPY calls 50% in less than 10 minutes. Took SPX calls 570, sold them for 750. Damn. I took SPY calls. I want to join the Discord today. Is the Apple code still in effect? Yeah, use the Apple code AAPL, and you get $99 a month for life. You lock that in for sure, because we, as I said before, are taking the group private. It's going to be invite only. If you're in, then you're already in. It was surprising that I got so many questions about, if I'm in, does that mean I'm going to get kicked out? No, you're not going to get kicked out. So for those of you that are joining late, I was going over why after after the announcement at 2 p.m., I would like to see longs as opposed to try to continue this short. Jerome Powell left the rates unchanged and then talked about how we're coming close to the end of the rate hiking cycle, but we don't know when we're going to cut. We're still very serious about inflation, blah, 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 blah. What is Jay Powell saying right now? Market is tanking again? Dude, this is the typical market cycle. We're just taking liquidity from end to end. This is how the market operates on a daily basis. Look at it every single day. It made the move down. We took liquidity, made the move up, took liquidity. This is every single day you will see this. Have you never looked at an intraday chart before? It's just a series of taking liquidities, bro. I shorted at the top. I would take profits, honestly. I wouldn't hold this short because we have this high here. Well, actually, you know what? This is RTY. Let me check ES and NQ. If you shorted at the top, good job. But, oh, we did take London high on NQ. Never mind. We did take that. This is London high. And we scrapped that liquidity right there. So even though ES didn't take that liquidity, NQ did. And now we have divergence once again, guys. Once again, we have divergence where ES made lower high and NQ made a higher high, right? This is bearish divergence as opposed to this one down here. When I said that I'd be looking for longs, this is bullish divergence. This is bearish divergence, and NQ already swept London highs. So there is an opportunity for a broad-based short here for sure. Are you thinking of closing your puts on Tesla? I don't have puts on Tesla. I shorted at the top. Is the Discord cancelable anytime? Yeah, you can cancel it anytime. Just took one SPY call from 53 to 150. 1 to 3 RR seemed reasonable. That is awesome. QQQ calls. Anonymous donated $50. Appreciate whoever that was. Thank you so much. Thank you so much for donating to St. Jude, whoever that was. Are you thinking I'm closing? No. Why would I close them? The cash secure puts on Tesla? No. Why would I close them? Once you get on the Discord, you'll never want to cancel. No, dude, we closed the Unity calls. Anonymous donated 10 pounds. Appreciate you donating 10 pounds to St. Jude's. Thank you so much, whoever that was. Appreciate you. Yeah, there's a live chat, bro. This is it. Yes, there's a live chat. There's a beginner's chat too. Where is it? Right here. That rejection off settlement paid. Which settlement? Hold down the shift key, AstroGeek. I think the major trade is done for the day. Which was the long. Sorry. Could it go back down to take out the lows? Based on what? Just based on the fact that you want to get in a trade? What is the thesis? NASDAQ has mitigated this daily fair value gap here. What are the earnings today? Let's see. Earnings. I don't think there's big earnings today. Qualcomm. Oh, you know what? I want to look at Qualcomm real quick. So we have Qualcomm, and that's it. And then tomorrow we have Apple, Amazon, and Meta, right? Oh, I did want to take a look at Apple. Brian, appreciate you, man. Thank you, Brian Carl. $25 to St. Jude's. Thank you, man. Wow, you guys are making money and donating, man. That's what I like to see. I think the big move has been made, guys. I think the big move has been made. Could it drop from here? Yeah, because NQ took out London highs. It's not an optimal trade from here. It definitely could get rejected off here. But I also like to trade in line with my daily bias. And the fact that we dug into this this daily fair value gap here. It's tough. It's tough to take a broad base short here. You could take a scalp short here off of this. Not my favorite play. If you made your money, leave it alone. Emmanuel, appreciate you, man. Thank you so much, man, for your donation to St. Jude's. Thank you. What was I going to check? Oh, Qualcomm, yeah. Let's check Qualcomm real quick. Beep, beep. Who got the keys to the Jeep? Vroom, boom, boom, boom. I'm riding in the Jeep. Top down, loud sound, see my peeps. Give 'em pound now, look who it be. It be me, and Timothy. The options market overestimated Qualcomm stock earnings move 50% of the time. I don't like this 50% junk. I do like this 50% junk. It really doesn't excite me. Pretty Brown Eyes completed the lyrics for the song. Pretty Brown Eyes, you better not be a dude with that name. If you're a dude and you named yourself Pretty Brown Eyes, I'm going to be very disappointed. I know, it's probably not politically correct to say. I'm just stating a fact here. I imagine the name of my channel was Pretty Brown Eyes. You guys wouldn't follow me. Be honest. How those calls looking? No, dude, you would be out of those calls. Why would you be in those calls still? Someone explain the concept of day trading to this guy. Why would you just be holding these calls? You know you can close out your calls whenever you want, right? No, I'm a girl. All right, good. I'm just messing with y'all. Buy high, sell low, best strat. I know, dude. This guy's saying how those calls looking. See, you just gave yourself away, bro. If you're still holding on to those calls, something's wrong with you. Let's take a look at Apple real quick. I want to know what an iron condor pays. Why? Because it says that Apple's move is overestimated 67% of the time, very close to Microsoft, right? So with that said, we want to take a look at what a 25 delta iron condor is going to pay. Now, remember, the 25 delta iron condor on Microsoft paid us $2.20 for a $5 wide 25 delta iron condor, which is wild. Imagine someone laid you these odds in real life and say, yo, I'm going to give you 78% of your bet payout for a bet that's expected to pan out 75% of the time. That's wild. Spy mad dumping. Yeah, I said we already took liquidity from London high. So a drop is warranted, right? We took a major liquidity at the high. If we didn't, then I would say we have more to go in order to take that liquidity. But the move has already been made. If you already made your money on the rally, like if you were watching this when the stream started, you would have been in some kind of long. You don't need to get in a short. You made your money. Uh, 181.75. Wow, that was fast. Welcome to day trading, bro. Delta 25. What? We don't have a 25 delta? It just goes from 30 to 20? So $6 expected move on Apple. Okay, fine. We'll sell the 30. See, this is the type of shit I'm talking about. Is what he is saying bearish? It has nothing to do with what he's saying, bro. They skipped like everyone expected, right? Then CNBC came out and said, oh, he sounds a little hawkish. We got the drop. We took out sell side liquidity. Then when Powell came to talk, there was no new information. Time to rally. That's why I was saying you want to look for longs. Longs happen. Took out buy side liquidity. And now the play is over. Okay, so it's not bad. Apple's not bad. You're still getting $2 and you are risking $3. We are tanking. Oh my God, bro. I wish people would pay attention to what I said. See this? We took out London high. Now we go back down to take out whatever liquidity we have down here. The crash is finally here. Oh my God. Everyone thinks the recession started. I mean, watch my last video. Watch my last video. I definitely, as I said before, I'm not comfortable with where the market is at, given the peak rates, for sure. Okay, back to Apple. So 190, 195 call, 180, 175 put. Apple reports tomorrow, right? 67% chance it doesn't make the expected move. It's not as good of a payout as Microsoft, but it's still pretty asymmetrical. If I take this, I'm going to announce it tomorrow, because Apple reports tomorrow, not today. So you don't need to get this today. Want to bring inflation down while keeping the labor market strong. Don't think March rate cut is likely based on meeting today. There you go. Does NASDAQ pull individual stocks or vice versa? NASDAQ is a collection of stocks. The stocks in the NASDAQ will determine whether NASDAQ tanks or not. And yeah, we also had this bearish SMT divergence that I said earlier once we took out London highs. Wow, ZT unmoved. I think ZT might actually start dropping tomorrow until at least the next CPI, if not the next FOMC meeting in March. I might get into a ZT short. All right. Still green? What did you do? Give some money back? What do you think about buying SQQQQ? I put out a video, man. I put out a video last week where I was talking about it's probably time to start hedging. But yeah, I mean, if you look on the weekly, it's laughable. It's down 1.4%, and ES on the weekly is down 0.61%. Can we all do a quick vote on where we think S&P will close today? Let me do this. I'm going to do this in the Discord. Hold on. Trivia. Where's my trivia channel? Okay, trivia answers. Edit channel. I'm setting up a trivia in the Discord. Hold on. Where's my announcements? All right. What will the SPY close today? We'll pick a winner for $100, Cash App or PayPal. Closest to the number without going over wins if there is a tie. First message chronologically wins. Will close voting at 3:30 p.m. EST. If you vote more than once, you are automatically disqualified. Go. All right. So I just did thank you for the suggestion. So I just did a trivia question in the Discord. Whoever gets the SPY close today, closest without going over, wins $100, and I'll send it to you on Cash App or PayPal. Done. Let's see these come in here. Damn, they're already writing. 483.06, 486.80. All right, let's see who's right. We'll know. Wait a minute. Was put onto you by a 70-year-old guy in a bullion shop? Are you serious or are you just fucking with me? That's pretty dope, man. That's pretty dope. I want to buy a cap. We're working with a new supplier. Those caps ran out. We're working with a new supplier. Guys, don't put it in here. It's I'm doing the trivia in the Discord. Paulo, hopefully we'll have it sorted by 2 weeks. Hopefully. All right. I am going to do a video later today on what I think, where I think the market's going to go. It's not much different than, honestly, like a lot is going to depend on Apple, Amazon, Meta earnings, but those are like the 6 of the Max 7 will have already reported by Thursday. But I think that the market can, if the guidance is not terrible, I think the market can continue trucking up a little bit more. But I think that at some point this year, by Q2, we will likely get a recession. And I think the Fed will cut by May. One last thing I want to look at is if this actually changed here. Because remember, March, it was like 54% likely that the Fed would do a cut. I want to know if it changed here. So I want to check to see. Ooh, it did change. Now, almost 60% likely the Fed is going to stay. Interesting. TTT intimate sets. You're a fool, dude. All right, guys, for those of you in the Discord, we will be doing the, oh, you know what? I want to see what he says about balance sheet. Hold on.
Fine that inflation's coming down, but the prices they're paying are still high. So that is what, that has to be some part of why people are unhappy, and they're right to be unhappy. You know, this is why we need to keep price stability. It's why we need to do our jobs, is so that people don't have to deal with things like this. In terms of, you're right, in recent surveys, you've seen a couple of significant increases in consumer confidence or happiness with the economy. I guess that's a good thing. That can support spending, can support economic activity. There's some evidence of that. But it is a fact that we have seen a meaningful increase. I think levels of confidence are still maybe not as high as they've been at various times, but they certainly have come up.
Thank you for taking our questions. Brian Mena, CNN Business. Committee members have said they'd like to meet with business leaders and stakeholders.
All right. So there you have it. Powell hawkish, saying a March cut, not likely. It's still going to depend on Apple, Amazon, Meta earnings. If their guidance sucks, in my view, you saw the top of the market, guys. In my view, this is the top of the market. If their guidance is decent, this can continue inching a little higher. SPX could get to 5,000, but I'm not looking to buy much here. This is a seller's market here, not a buyer's market. Only thing I'm interested in really is bonds. I said Tesla, I would wait a week, but you could nibble. I don't mind the prices. But the only thing I'm excited to buy is bonds. That's it. From here. Thoughts on whatever you're eating? Bro, these are fire, man. California almonds. Did you see rum filing? I don't even know what that is, bro. What's rum? All right. I'm going to do a write-up in the Discord on current market conditions and what I like in the long term. So watch out for that this week. And yeah, I'll be releasing a video on YouTube. But appreciate you guys. I'll see you on the next one. If you guys want me to keep live streaming, we're getting more people show up to obviously these events than the daily live streams. But if you want me to keep daily live streaming, come by and watch, bro. Come by and watch. Otherwise, I won't be incentivized to live stream daily. It is kind of tiring and gets in the way of my own trading, honestly. So, all right, guys, appreciate you. Talk to you on the next one. Peace.